All right, ladies and gentlemen, I hope you're having a wonderful evening. It's Thursday once again. We got a special live watch list. We have the chat already waiting to go. We're going to go over what happened today, talk about some of the stuff we got for the rest of the week here, and get prepared because once again, man, every single day the world is changing here. So, Chattadonia, if you are new, this may be a little unfamiliar, and even then, if you just started subscribing and you just started seeing the nightly watch list, it is exactly the same, but you're going to have to bear with me here today because we are going to be live. Oh, there it is. We are going to be live answering the questions, going over the lessons. We got economics. We got plays to talk about. I actually made a couple and all of the good stuff, so I have everything that is in a normal watch list. However, we are going to be live, and if you're not used to it, oh my goodness, you are in for a treat. I'm telling you, these Thursday watch lists, man, we only started doing them live in 2024 on Thursday, and it has been a joy. We've had great economic lessons. We've talked about a lot of different things, so I hope you're locked in for it, but for real, you shouldn't be unfamiliar with me going live because we are live Monday through Friday, 30 minutes before open, youtube.com/thestockmarket. Yes, that is us. We've been doing it for a very long time. We will be there tomorrow. So if you like this live or you just want the news info, you want to even ask me a question live and we could go over it, that is where you're going to be. So that being said, I hope you guys are ready. I do have another treat for you because last time we had one of these live watch lists, we made a big discovery a couple months ago or maybe about a month ago. And, well, guess what? That happened here again today. So we're going to have to talk about that, but bear with me. I hope you're ready because before I do any of that, good evening, baby. Good evening, not good morning. I might say good morning, but how you living, Chattadonia? I got to say what's up to all the Chads out there. I see Tim Whitman in the house. Dago, winning loser. Whoa, Jericho, Sunkiss, Mark J, Laurie, Energy, Carissa Hines. Oh, Candy's in the house, baby. What's up? Good evening, Hairstone, CG, Brian Fierros, Dave K, baby, Flame, LT Long Term, Sean Most, J Ray, J Mark, Screw College. Well, we about to do some college right now. You know what I'm saying? We got to do some college right now. What up, Krista? How you living, Zoraz? Professional. My dinner was good. It was like a lunch, dinner, breakfast. You know what I'm saying? What up, TL Content? Isaac, what's going on? Andrea, C-Money. Whoa, Rotary, Christian, King Kong, baby. Tyler Steele, Frank V, Jorge, Walter White, Mazim, Dewey James, baby, and the Sons of Averaging. Oh, my goodness. What's going on, guys? I hope you are locked in. It was great seeing you in the morning. I was already getting hyped up for this Thursday evening, so I hope you are locked in. I hope you got your notepads out. I hope you liked the video and loved yourself. Love yourself and be still, my brother. Oh, yeah. I'm dropping Philo at the beginning, so we have a lot of things to talk about. I mean, before I get here into the keys, I mean, it was a very weird day. Not only did we hit 5,500 and pump it up in the morning, you started off good. We came back from the holiday. Everything was looking good, but once again, if you were there in real time while we were live, thankfully we were able to call it out before it happened, but everything was all over the place. You had NVIDIA up. There was news about SMCI working with Tesla and even Dell and making all of these things, and the video was up. Then Apple started dumping, and I mean, long story short, what I am trying to tell you is that market concentration, that awful halitosis market breadth, it's breadth, B-R-E-A-D-T-H, not breadth, but I had to make the joke, but it is awful, and it got in the way once again, and it may have seemed like we made a big move up and then a big move down, but quite frankly, nothing really moved at all, and it was only a couple of names making some outsized moves. Now, it's setting us up for a couple of things, but the question you should be asking is, why did we make the move that we made? There was actually a ton of things in the morning. Not only did you have the day off and the whole rest of the world was open, but when we came back this morning, you had jobless claims that were bad, house construction data that was bad, and then you even had the Philly Fed that came in bad as well. All of the data in the morning was not favorable at all. You chilled out with France. They had a bond sale, and the fact that their bond sale was good, it showed confidence after a lack of confidence given the volatility that you saw last week. And then here is the best part about all of it. This is what we're going to talk about here today. You had a surprise rate cut by the Swiss National Bank. So if you guys were here for the economic lessons, remember the SNB is a very independent central bank. You know, it's really separate from the government. They operate kind of like a hedge fund, but they control the monetary policy, and once again, they cut rates. So I think it was the day that I got this Cybertruck. I think that was like a month ago or something, but we came on live on stream, and we had that whole talk about everything going on, and well, guess what? It was when the Swiss cut the rates again, and it was a surprise. This time around, it was like 50-50 odds, but it was still considered a surprise. And then the next part about it, you literally had China also weakening their currency. It's funny, you guys are calling out the yen right now. That's making moves even after hours. Yellen said some stuff about the currency. Japanese are like, nah, man, intervention should not change the current trend. And then it started flushing. But before we get into any other country right now, these two things are important. You had another rate cut by the SNB. And why is this important, Chattadonia? Does anybody remember the reasoning why this was such a big deal? While I wait for you to answer in the chat, since you are live, I am going to see if I could find you one of my handy-dandy graphics that I have shown you before. A bunch of funny money. Funny money, funny money, money funny. That's fun to say. Why? Why, my friends? Why? What's going on? Do I got to read? Oh, well, that's me. Oh, that's me. Anybody? Inverted curve? No, that's not it. I love the inverted yield curve, though. We're going to talk about the uninversion. Oh, yeah, it's live. I'm not going to continue till you guys answer. Not because of policy. No, 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 no. No, 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 no. I want you to think a map. Not because my girlfriend is Swiss. That's a great answer. Not the steepener. Not the bank failure and bond collapse. So that's not a bad answer. Oh, you're close. Rate cuts in Europe. Oh, I might give it to you. You guys remember this map that I showed you not too long ago? And once we finally started seeing them move, and then we had Bank of England in Canada, well, it started with the Swiss National Bank. So before anybody in Europe started cutting, it was the Swiss that pretty much started it. Before the Bank of England, before Canada. And now here's the deal. An object in motion stays in motion. So the question, why? Why do the Swiss keep cutting rates? So that's where the bonds and the bank pressure could come into play. That's what I was talking about today. But all in all, man, this is once again, the whole world is moving towards rate cuts. We may be next, we may not, because at the same time, think about it, all these other places move. The UK did not move forward. So that's another thing you got to think about. Although the Swiss National Bank did cut rates today, the Bank of England, they had a day where they could have done it, but they did not. And that kind of added to all of it. Oh, what's up, Brian? How you living, baby? Good evening. So the fact that the Swiss cut rates again, this set off a lot of things. It has an effect on the dollar. And this is where it also gets weird, because the second part of the day, and is it one thing about rate cuts in policy? Yes. But you guys are even bringing up the yen, but moves like this, I would pay attention to the dollar. The dollar is near all-time highs, or yearly highs, excuse me. But the fact of the matter is, when these other countries start cutting, that is going to strengthen the dollar. And then on top of it, you haven't had this action in a couple of years. The Chinese today, they allowed their currency to fluctuate a little bit more on the band. They usually keep a tight control. If you go look at the Chinese yuan, it really hasn't moved out of a range in a while. Well, guess what? The Chinese are down with letting that thing weaken a little bit, and it's not a big deal for now, but it's the first time we saw it. So the point is, yeah, there was a lot going on, and we'll talk about the market. Even the next week, we're going to have a certain amount of data, but the fact of the matter is, this whole rate cuts around the world, how it's factoring into gold and the dollar. This is very much in play, and maybe we watch everybody in Europe, that is hot Europe summer, and they start doing their cuts, and then we're the final ones, or it will be a precursor to us, but that just all depends on how everything plays out. So that is your first key. The second key coming into tomorrow now, you really don't have that much data. You literally have the data for PMIs, I believe, and then after that, it's going to be the PCE towards the end of next week. But the problem with all of this is that you're going to have this high concentration in the meantime. And what is the problem with data and high concentration? Does anybody know? So let's say the PMI tomorrow comes in really good or really bad, but noticing how the Mag 7 and the market breadth and concentration is at a certain degree, what makes it so difficult, or what makes it, I guess, harder to read? Anybody out there? Anybody? I see Brian, baby. What's up, man? Anybody out there? I don't know. I need to go to the bathroom. I feel like I'm live on stream. Chatadonia. Oh, wait, I'm not on live chat. I'm on top chat. My bad. Not the index weighting. No, not volatility. The market is NVIDIA. That's low-key close, man. Not enough volume, low liquidity, price action. Price action and NVIDIA combined. Yeah. You guys are close. I mean, here's the deal. Yeah, it could be bad or good, but the Mag 7 is okay, then not much movement. Exactly. That's exactly it. I'm very, very glad. That's a great answer. You've been listening. But that's the fact of the matter. It doesn't matter what the data says if the data is not strong enough to take out Apple, NVIDIA, Tesla, Microsoft, and Amazon. Meaning that, yeah, they will react to the data, but they're not going to react as much as everybody else. So the equal weight will probably get clobbered on data. However, the rest of, if you're trying to play the data and get a read on it, unfortunately, it'll be hard. So I would watch out for the bonds tomorrow. We'll see if the data gives us anything. Other than that, I hope you're ready for a very slow move, because even coming into next week, you'll get a lot of housing data, some manufacturing data here and there, but all that's going to matter will be the PCE towards the end of the week, but that'll be like Thursday, Friday, and then you're going to have to sit through 3 days near all-time highs, waiting and playing the game of what will move the Mag 7. Ta-da! So keep that in mind, but now the final key. I don't know if I should tell you guys this. I don't know. Some of you might get sad about what I'm about to share with you. Some of you might like it. Some of you may have already made your decision. I don't know. Can you handle this? Do I have a mature audience today? Do I have an audience that's ready? You know, are we friends, bro? You know what I'm saying? Like, are we good friends? Like, am I not? You know, I don't want to. I need to make sure you in the game, bro. It's not tinfoil. It's just it's a stark reality, bro. It's a very, very stark reality, unfortunately. Okay? And here it is. I believe in the Lord Jesus Christ, but it's either you submit to the Big 7 or chill, bro. I put LOL in there. But no, it's literally you submit. You submit to the Big 7. Honestly, it is kind of like Tina. There is no alternative, realistically. I'm telling you, and I don't say this out of like, I'm not telling you, like, honestly, you should go read your Bible, but like, no. It's actually, I think, yeah, were you the one who said this? Somebody said this in the chat like a couple of days ago, but it's facts. It really is. You need to really make your choice for Christ. If you want to play and you want to do the trades, it is hard to jump in, but at the very least, and there's like, I don't say this out of like, I don't know. I have reasoning. Like, I don't know why you would think I would say this, but you got to really understand. Eventually, there will be a rotation. You're 100%. And even today, someone was asking me, they're like, oh, well, because the Dow was really strong while, we ended up going down after hitting a new high. But they're like, is this a rotation? It's evidence of a rotation. And unfortunately, you had a lot of names up, but it's all being moved by these couple of stocks. It's really hard to tell if it is a real rotation. I don't think you could conclusively decide. You will see a really, really big trend shift, but the reason why I'm telling you this is because everything else is literally dying. I don't know if you guys are aware. The equal weight is dropping at one of the fastest pace since '09. It hasn't moved in a couple of months. NASDAQ to Russell, even the NASDAQ to Dow Jones, is the ratio is the lowest since '08, '09, I believe, or even 2001. If you go look at even the Dow, it's not even moving. But even the Russell, and looking at every other of the 497 names, and I think if you take about like 200 of them or 300 of those names are trading below their 50-day moving averages. Over the last couple of months, you have literally watched a lot of money get drained out. It doesn't mean that the money's disappeared. It's going somewhere else, and some of it's just getting lost or getting into the thing. No, it's not even the Hindenburg because you don't even have enough names going higher. I'm glad that you brought that up because think of you have the amount of names trading lower and hitting lows, but here's the deal. They're not all hitting 52-week lows, but you don't have that many names going up like that. It is a very select hand few, but it's not about like the whole point is whatever's doing good or not, that could stay doing exceptional for quite a long amount of time. You know what I'm saying? But at the same time, it's like everything else is doing extremely poorly right now. So our long terms are great, and you have other names holding up, and it's not like you're in the doldrums of some other names, but when it's all said and done right now, it's just like, you know, if you want to focus on a certain area and go after certain trades, you are better off going where the money is. You're better off playing NVIDIA at the highest point and hedging it versus trying to find some, and that sucks because I like value. If you're talking long term though, I would buy the shit out of all of this value. I'm a big fan of the deep value, but if you're looking for momentum, trying to buy the dip, trying to hit swing trades, and you have a majority of names dumping, unfortunately, it's just not going to be there for you. So I hope you guys are aware because this concentration thing is real. And at the same time, if anything does go bad, you already have the setup of everything else down. That's the crazy part. So there is a lot of other names that just have dropped at a very rapid pace, and unfortunately, it's just all concealed. That's why people are like, it's manipulation, it's this. It's just like, no, man, it's an attention problem. You know what I'm saying? I don't think it's as manipulated where it's just like, Wall Street, it's a game of attention. It's kind of like social media, but you have more people focusing on a small name. And here's the deal. I mean, you got to ask yourself what's different between this and the FANG stocks. I made a fortune buying Amazon, Netflix, and Facebook back in the day, and that's what it was like. So, and this is eventually, people are like, oh, it has to come down. I hate to break it to you, bud. No, it doesn't. That's why I'm telling you, you either submit or make your decision. And there may be individual news, and if something can get a lot of attention, it will be able to emerge kind of like Dell and a couple of other names. But when it's all said and done, once the attention runs out, it's just going to go back to the names that are drawing in the money. So we'll see how it all plays out. I mean, back in the day, the names didn't dump like they did today. That's the thing, because like even in 2014, 2015, 16, 17, that's that era that I'm talking about. It would just be where like Apple, Facebook, Netflix, Google would run up crazy, but it didn't mean the other names were selling off. You know what I'm saying? Like that's the difference about this rally, is that you're actually watching a good majority of names just go down into the gutter. So we'll see how it all plays out, but I hope this prepares you because it is summer. The liquidity is low, and like I'm saying, I mean, you don't force anything, don't go crazy, and I think you will be good to go, my friend. So those are the keys, but now let us get into the plays. So, right off the bat, I got a couple of plays to watch, and I'm mad I didn't play this, but then again, you guys are watching me go to a lot of cash here, but this is what I kind of said is kind of the cool part. If I don't take as many plays, I mean, I could still call out some dope shit for you guys without even having any bias, and Gilead was one of them, bro. We talked about this one on Monday and even a little bit last week. We talked about them related to the upgrades post post ex-dividend, and this morning they had a data. It was 100% efficacy on one of their trials, and you don't really hear that too often. It moved very slow and then took off throughout, so it has good data, and there's still other tailwinds in terms of their diabetes drug. And if you guys remember last time we talked about Guild, my only problem is like I hate and love this stock. And you got to think about it. One, this is one of those names I'm talking about. Like, you got it. Like, Gilead's a big-ass company. And, like, look, bro, this year, this thing is down a ton. Again, you could go through a lot of names. Like, I looked at it today. McDonald's is down by 15% on the year. So, I like Gilead, but it's like, it's kind of ugly. You know what I'm saying? Where it's like, it's a solid name. It has been selling off. If it does not find a way to, like, if the diabetes drugs, this new HIV drug, if none of those things are good, you're smacked back into doing nothing for a while. But like, it's so compelling just because this stock, I mean, in the last 10 years, you're almost at the same exact price. It pays a 5% dividend, and you could hold this as a long term. I think the leaps are decent, but here's the problem. I was telling you guys about this a couple days ago. If you snagged any of these plays before, you probably made a nice pretty penny. I still think there's kind of a midterm, long-term play with this one, but unfortunately, your prices are going to be a little higher. But see how this plays out. If it gets attention and we still haven't even heard about the diabetes stuff, that will be a good follow-up there. So watch out for that. That is play number 1. Then play number 2. You guys should have seen this one coming, huh? No, why is this one number 2, man? Why was this play number 2? Gold / MGC is a gold future. I would not buy GOLD. That's a company, that's a miner. If you wanted to play a stock, GLD is probably the best ETF. But if you are going to play options on GLD, you are better off just sending me money. It's the same thing. If anything, I might shout you out. I'll get you a horn or something. But GLD, you don't even get a player's card. You know that? Like in Vegas, you at least get like a free buffet, some crab legs, a hotel, some free slot dollars or something. Like GLD options don't even give you anything. I hit like maybe once in my life, once or twice I've hit a GLD option, but it's not a good. Play the equity or go play the future. The good part about GLD is that it's an ETF that holds the futures of gold. So that's the only, it's almost tantamount to buying the future. Just be mindful of the option, but why am I playing this one? Literally, we already had it in play, and I told you guys, just keep watch on it. I wasn't ready to get out of it from last week. Canada, Bank of England, it didn't really play out how I thought, but like I was saying with the range, there was an opportunity there. So it was already in play, but then the Swiss National Bank news today, that's what really got me going with it. And then that went up. I think we're up like, even off 2 micros, we're up like $500 or something. It's going. A lot of people, we talked about silver. I was going to grab it this morning, but I hesitate on silver every time. I'll buy silver if it drops, if it gives up more than gold. If you are not aware right now, silver is outpacing gold by almost 15% on the year. So not only is gold one of the top performing assets of the year, silver is outpacing that by 15%. So unfortunately, I'm going to wait for that, but until the Swiss National Bank stuff, this might give us like a week or two. I'm going to look for 2,400, but last time this happened, it went up another $100. Oh, Brian, why can't I gift memberships? I don't know, actually, but my man, see, that is a better move than GLD options, man. Amen. That's way better than a GLD option. Amen. Amen. So that is play number 2. And then finally, play number 3, baby, Penn. So this one, we actually made a play on this one today. And this one's like kind of interesting. They had news that Boyd Gaming, it's just a rumor that they wanted to offer on Penn. There's not really much detail on it, and they haven't even been able to confirm if Penn had even a talk with Boyd, and then people were talking about needing regulatory approval, or approval from like ESPN because of the deal with Penn. So the thing about this one, I think it could be an interesting play. We do need to get some follow-up, but it is a little fishy. It's kind of weird because a bid or BYD, it does not have a lot of money and they're not really worth much. Some people were floating the idea that if BYD wanted to buy Penn, they would have to get a loan of some sort, but I don't like deals like that. The crazy part about Penn is that it was trading at like $100 at some point, and then on top of that, go look at DraftKings. DraftKings valuation is almost 10 times higher than Penn. So that has a certain effect, but looking at the deal, if it's going to go through, it really reminds me of the TKO merger. We actually hit that play. Do you guys remember WWE and TKO? There was another deal too. Which one was it? Where it was a merger, but I don't like mergers as much because then you what was it? What big company was it? Adobe or Oracle? There was one where you got like part shares and something else, but it wasn't. Yeah, TKO and WWE was last week. Another GID, baby. God bless you, Brian. So it was very, I don't like the merger deals. The merger deals, you do not make as much money if it kind of goes nuts, if that makes any sense. Because if there's no the buyout price will fluctuate based on whoever they're merging with, and it doesn't really give you the same juice. So you got to watch out for that, but we'll see how it all plays out. But those are the main plays. And now, as far as the plays that I made today, I actually made a couple. So, again, I'm not really trying to play too much, trying to keep them cheap. I like my cash and being prepared, but I did see an opportunity today, and this morning I went with the SMCI. They were riding all the good chip news. They're kind of a part of the Mag 7, but not really. So I made sure right when the play was up, I took profits, but I grabbed a daily or a weekly 12.50 call on SMCI. It was about to break through, and I grabbed it for 55 cents. And then about 30 minutes or 15 minutes later, those contracts shot up, and then I ghetto spreaded the 12.70 for 90 cents. So literally, I made about $45 net profit, and then I still have the option, and then I have about $2,000 of upside if the stock magically goes up 20% in a day. Who knows? Maybe it will, but point is, no risk. Got a good position in the morning and got out of it, and then Penn, I grabbed the January 55 calls. This is an insane price, but it was the only options that were cheap. So I spent $22 total. I grabbed 2 of the January 55 calls at 11 cents. None of this is a recommendation. You will lose money. That is my exposure to that, but the general idea was if we get more details, if there is one of these higher prices, then that could feed into this a little bit more, and then I think that will that's a pretty fair price, but it was the only cheap option out there. Oh, James Cash, baby! What's up, fam? What's up, baby? How you doing? How you doing? Shout out Kaylin for putting you onto this channel. Kaylin! That's a homie right there, man, for real. Y'all better get a long-term too, man. Y'all better not be gambling. But you could gamble once you get a long-term, but you got long-term before you gamble. And then even after that, you got to make sure the gambling don't get in the way of the long-term. But Kaylin, the homie, baby, that's what I'm talking about. But that is all I have for you, Chad. It is now time for questions. And here's the deal. Usually on the live, I leave you guys up to the questions, but I did have a good question today, and I think it is something on the macroeconomic scale that we kind of got to talk about. What is going on with real estate right now? You had real estate data that was bad, but this is something I hope all of you, because maybe some of you are not able to be there on stream, and we talk about this, but this is actually a big deal. What is going on with real estate is inventory. Inventory is climbing right now all over the United States. In certain areas, it is climbing higher than others, and it's getting to a point where it's getting above 2019 and 2020 levels. On average, in America, as every state, city, whatever, on average, inventory levels are still below 2019 and 2020, but you're finally getting a noticeable increase in inventory. And why is this important? Because this is what Jerome Powell has been telling you for 4 years to wait for. Honestly, I think that if anything, real estate has been one of the things that a lot of people have not held Jerome Powell accountable for. Because if you were, it was every year since 2021, he was like, yeah, rents are going to come down next year. Rents are going to come down next year. Rents, they have a lagged effect. They never came down. House prices never dropped. Even now, they're still high. But this is like your first evidence of inventory actually going up. So whether you think the market's going to crash or you want to buy a home, the point is you're kind of slowly working our way into a different real estate market. It's too early, kind of like, with everything going on, to say if it's a full rotation, but this is one of those signs. Now, look at economic data is coming down. You could look all over the curve, you know what I'm saying? But it's like you're now watching at the outskirts of things. Real estate inventory is starting to pick up. But, bro, this is the effect. We did the math today. If you wanted a $700,000 home right now at like the 6.87% interest, that mortgage payment, if you put 5% down, so you got to pay a PMI, that mortgage payment's about $6,500. So to give you an idea, in like 2021, like again, and I even had a video telling you, I told all the real estate people, I said, stop lying. All the YouTubers were telling you it was going to crash. I was telling you, it's definitely not crashing at the end of 2021. The rates were about like 2.9, even if you got them at 4. Even if you got a house at 4%, that same $700,000 home, that mortgage payment would be $4,000. So it's wild, but like this is the whole point of why inventory now. The rates, it took a while, but we are starting to watch a little bit of pressure. So that was a question. We talked about it today. Thought I would bring it up. So it's here on the watch list for you. But now, Chattadonia, what do you got for me, baby? What do you got for me? Start to get defensive. Well, here's the deal, man. If you're always defensive, you don't have to get defensive. You know what I'm saying? One big thing I've been really preaching over the last couple of years, I've gotten a lot of things wrong and I've gotten a lot of things right. But I've been talking about this balanced, diversified strategy. You know what I'm saying? A little bit of assets, a little bit of almost every industry, making sure you even have a little bit of cash, make sure you have cash reserves. And really that's I think now till the end of the decade, that will probably be the answer that will save you with everything. So, I'm still buying real estate. I've been, more looking for better deals and getting it at the right price. But like for me, in a weird way, this is kind of helping me out to a degree, because I like the inventory. I'm actually very, honestly, and some of you guys who are on the cusp of like trying to buy a home, you should like this, especially if you want to live in a place for a while. Yeah, you'll be able to refinance and hopefully you could get a good deal on the home. But like now at the very least, even if you're trying to like buy a home and you're going to pay the exorbitant price, you have, at least you might even get a pool. You know what I'm saying? Like you might even get like a remodeled kitchen now, or you're going to have way better locations and better property. And that is the thing that I like about this market. So pair that with the right deal, it's there. But I will tell you, bro, you know what? This is what's crazy. Do you know what's happening? It's nuts, bro. It's nuts as far as real estate. Because I'm a pretty avid real estate investor. And, imagine my like Zillow. I have a bunch of houses over the years on Zillow that I've looked at. And some of them I would favorite. And no joke, in the last like 2 weeks, I have had about 3 or 4 houses pop up for sale. And it was like, this home that you favorited. I'm like, man, I don't remember favoriting this. And then I go back. These are the houses that were these houses were the homes I got outbid on. These were houses that people bought ahead of time before me, and it wasn't, oh, come on, I just had it. I want to show you. I have one for you. How do I search it? But literally, it's happened 3 times. Yeah. I want to show you this one house because it was in LA. This one, I was gonna buy this one for the Colt back in 2021, or this because it was pretty cheap. It's $1 million, and I say cheap just because the area. But I was gonna buy it because it was and turn it into a studio. I was gonna make it like a Colt studio for any of the guys if they wanted to come out there, and it was just like a small little house, and it was listed at $799,000 at the time, and it was in Hollywood Hills, and I was like, yo, I'm down with this, and I got outbid on it, and the house ended up going for about $950, and let me see what it is, like 8881 Lookout Mountain, I think, but I got outbid on it. Please tell me this is it. No, that's a different one. Oh, but I got outbid on it, and then sure enough, like I'm telling you here, the house just got listed again, and they listed it a month ago for $1.3 million. Fast forward to today, they lowered the price to about $1 million, $20,000 more than they paid for the home. Hold on, let me see if I could find it for you so I could show you it. But but this happened 3 times. There was 2 more houses in San Diego, very similar stories that I've seen. It's kind of weird. You know, it's like a little bit trippy here. Is this for sale? Home type. Where is this piece of shit? I'm trying to find it. Stanley Hills. It's finally, well, do you know this happened already, though? Unfortunately, bro, Powell and the real estate market and all these crackheads and NVIDIA, like, you know what I'm saying? Like, things have, no, that's not it. Things have, sadly, we've gone through this already, unfortunately. I don't think people realize that. Do you not remember 2023, the same thing happened? So literally, after the bank failures and all of that shit, bro, you literally had a lot of these houses sitting, but inventory didn't go up. I even had one of my houses. I sat on it for a while. LT was like, "No, you got to lower the price," and I said, "F all that, man." I said, "Watch," and it did end up selling for a lot of money. But this happened already before, and then BTFP, NVIDIA, a couple other things. Boom, you had another skyrocket. I can't find it. Maybe the house is pending already. That's weird. I just looked at it today before the watch list, but I laughed because I was very, very surprised because it was one of those, man. So it's been going on. Yeah, you have to find the motivation, but I think for people who want more inventory and you want a better amount of property, you could actually get it. So it's very, very interesting. Yeah, the cheaper properties, Midwest, I mean, cash flow is great. But do you have any other questions, Chad? I'm sorry, I got into a little bit of a real estate rant. I tend to do that. So if rates go down, houses should sell easier. I think there will be a little pop, but unfortunately, if we do get a more aggressive rate cut, and it's for other reasons, I think it'll be a very false rate movement or a price movement. AKA, I think it will eventually come back down pretty hard. I think because, again, some of these houses might just sit there. Unfortunately, you do need jobs and you need a lot of other things, and it's just easy to kind of ignore all of that. The chips, I think some of them, Intel, are at good deals. Otherwise, you are going through the higher end. I did get a lift in today. Yeah, I got a light one in, and then I was doing some kettlebell workouts. But yeah, man, that's actually crazy. I've been getting my balance on. My hips are OD, man. That's it. I'm actually doing legs and shit now. But it's good, man. The kettlebells are killer. They are killer. Home prices are holding up in my area of rent. That's the thing. Home prices haven't really came down. You know, that's why I'm like, even the guy, that property, I'm sure the one I just told you about, it's still a lot of money. You know, these are still elevated prices, but you're not, like, if you're trying to be a shitty flipper it's not work. It doesn't work anymore. So like, dude, a couple years ago, you could have fucking threw a dart at anything, bought a house and made a couple $100,000 and sold it within a month. It really wasn't that difficult because the prices, they were elevated. They were going higher and higher. But this time now, it's gotten to the point where, if you are trying to buy at the market or, one of these higher prices and then turn around and sell it to the next guy for, 10% more in less than a year, it's just not working like that anymore. So, well, yeah, rent that's the crazy part because rents are still high, but it is substantially cheaper to rent right now just because the rates are insane. Like I'm telling you, I was even looking at it. So if you could go and get like San Diego, if you wanted to buy like a 1 or 2 bedroom condo, you're going to spend like $500,000 depending on the size, and it might be small, $500,000 to $700,000. It'll be like anywhere from like $4,000 to $7,000 a month for your condo, right? And that's insane. That's not even including HOA. But if you wanted to go rent like a 1 bedroom, 2 bedroom in the nicest building in San Diego, it costs as much to buy in a shitty building in San Diego. So you could rent. You're getting half off essentially. So for the same price you would buy, you would get way nicer, way more, or you could spend $2-3 grand a month and get something very nice, whereas that you couldn't even buy anything, or it would put you in a pretty shitty place. So renting is cheap right now, and this is, I've said this for a while, and I do think, Lenny, what's up, baby? Long time no see. But I've been telling people for a while, man, like, if I like where I live. I don't know about you guys, but like I like living in like a nice place. I don't know. Yeah, call me what you want, baby. But I wasn't always like that, bro. Believe me. But like I think it's just as I got older. So like I don't have a problem with renting. Like for real. Like if you want to rent. And, like, you could get, like, a place that you really like. It's dope. You want to live the high-rise life. You want to go get something, and you like it. Like, there's no problem with that, especially if you can't buy those at that deal. But I think you should go and buy a house somewhere cheaper and then rent that out while you rent where you live. You see what I'm saying? So that's the big deal right there. If you really want to rent right now, take advantage where you could live in your primary, but go buy Indiana, go buy something in Ohio, Tennessee, North Carolina, South Carolina. Like I'm telling you, I would still get a house investment, and you could even find one that cash flows, and they're out there, man. I don't have any small farms or ranch. Email me. I probably could contact people, but I don't have any that I own that I'm looking to sell, nor do I own one in general. I kind of have one property with like big land, but it's not really like a ranch. But I want a ranch. That'd be cool. Ohio, baby. Ohio, I love talking shit about it, but I'm a Ohio property owner, man. You know what I'm saying? Ohio's great for rent. It's beautiful. It is beautiful. Michigan is great too. Certain areas you got to watch out for, but Michigan, Buffalo, still one of the top growing areas. But yeah, I hire property managers. And now, I do have exposure to a lot of places. I like to go areas that I'm familiar with. So usually, I have the same people now running it in certain areas like Ohio. I got one in Ohio, then I got a couple more. I got the same people managing that. Same thing goes for Indiana and the Carolinas as well. So it's easier than you think, but like I'm saying, I would go and rent where you live and then go and find a nice investment property. And they're out there, bro, especially in like the middle of fucking nowhere. And I say that because I live in California, but you could find houses already rented and they already cash flow, even with these high rates, believe it or not. So I'd say half or maybe 3/4 of the home that I have purchased recently already have a renter, And even if I put a loan on them, they would still cash flow. So, like I said, you could find them. You would be surprised. And these are in the cheaper areas. This does not work in California. So I'm not buying houses in California that are rented and cash flowing. That doesn't happen. Honestly, even in 2019, 2020, it was hard to cash flow in California. You usually get the equity. That's where your money's at. But, the cash flow in all these other places in America, they're great. So don't forget about that. What else we got, baby? Otherwise, is it time for the lesson? Because I got an economic lesson, baby. Oh, yeah, we've been here for 45 minutes. Well, I got to go pee, you guys. This is kind of weird. I've never had to go pee on a watch list. I don't know. Like, what am I supposed to play you? Well, let me see if I could. Actually, I showed you the what's it called? Oh, where is it? Play some uncle. I got an uncle I could play for you. I could play another uncle for you. I got you, bro. Let me just go pee real quick. This doesn't usually happen. Thank you, God, for the day, for the joy, for the change, the divvies and the chase. Brought it through y'all city, screaming, say that 10%. I'm going to buy that triple net. Oh, man, they don't know. Oh, shit, y'all ain't hear it? Y'all just heard me peeing then. I didn't have it unmuted, my bad. Oh, too late. My bad. You just heard it through my KRKs. That triple net. And honestly, triple net deals, I've been shopping a lot for those, bro. That triple net is where it's at in real estate always and forever. If you get your hands on that, you need an old boomer to sell you them usually. That's it, bro. You heard the stream? Oh, yeah, you must have. I was like, I won't sidebowl it. I was like, the music's playing. They won't hear it. But then again, yeah, man, my bad. Well, Chattadonia, questions are over. Time for some lessons. So, we're going to get into our economic lessons here. And congratulations if you guys have been following along, because we are 119 pages deep. We are going to finish up Chapter 5 today, and then we are going to get to the intro of Chapter 6, which will discuss import substitution. Again, we are talking about the state-centered approach right now. We talked about society-centered approach and how, people try to get gains, and it's based off societal interest groups and how that determines policy. And then the other view is how, when it's all said and done, it's about the states and then the industrial policy and all of that stuff. Well, we're going to wrap that up here today, and then we are going to start getting into some good econ here, and then again, if you haven't noticed, it always has the political, again, we're talking IPE, International Political Economy. So it is going to always come back to how certain things are decided and the decisions that people make in government here. But, it is going to start discussing trade. And as we understand how trade is made in the policy, we are going to start working into understanding, things like the dollar and the value of dollar and the importance of trade. So this is why, honestly, it's taken us a couple of months here now, and I'm glad we've made the progress. But this is all the buildup to get you into the juicy stuff. Because once we do, my brother, oh my goodness, it is going to be great. So, let us begin, my friends. Bow, bow, bow. Here is the conclusion of chapter 5. And then again, if you guys haven't, when I interrupt, it'll be opinion. And if you are aware with this book so far, if you haven't noticed, Homeboy explains all of this theory, and then he always ends it by telling you how not good the theory is. I don't know if you have, that's what I love about it. And this is where, again, I've applauded some of you with critical thinking. You know, you got to be able to know things and understand it, but you should be aware of the weaknesses. It's not as if there is no weaknesses that don't exist in a system or anything. So that's the beauty of all of it. This is International Political Economy by Thomas Oatley. So here it is. Yeah, same book every single time, baby. So conclusion. Even though a state-centered approach directs our attention to the important role that states play in shaping the structure of their domestic economies, it does have some important weaknesses. 3 such weaknesses are perhaps most important. First, the state-centered approach lacks explicit micro-foundations. The approach asserts that states act in a way that enhance national welfare. A critical student must respond to this assertion by asking one simple question: what incentive does the state have to act in a way that do in fact enhance national welfare? Anyone who has visited the Palace of Versailles in France or has spent any time reading about the experience of other autonomous rulers know that autonomous states have as much, if not more, incentive to act in their own private interest of state officials as they have to act in the interest of society as a whole. Why then would autonomous state sectors or actors enrich society when they might just as easily enrich themselves? Answering this question requires us to think how state actors are rewarded for promoting policies that enhance national welfare and are punished for failing to do so. In answering this question, we develop micro-foundations, an explanation that sets out the incentive structure that encourages state officials to adopt policies that promote national welfare. But the state-centered approach currently does not offer a good answer to this question. The reward structure that state policymakers face cannot be elections, for that pushes us back towards the society-centered approach. The reward structure might be security-related. One could reasonably argue that states intervene to enhance the power and position of the nation in the international system. We must still explain, however, how these broad concerns about national security create incentives for individual policymakers to make specific decisions about resource allocation. The point is not so much that micro-foundations could not be developed, but rather, as far as I'm aware, that no one has yet done so. As a result, the state-centered approach provides little justification for its central assertion that states will regularly act in ways that enhance national welfare. So again, a lot of the theories, it relies upon doing things that will enhance everybody's welfare. But some of you guys brought this up on our debate last week. Think about it. Who is to say that these actors with unchecked power are going to act in that fashion? Why would they? And then again, you can't say because they'll get voted out, because that takes you back. That's a society-centered approach. So in some ways, it's just like, that is the weakness to the system. It doesn't, the whole assertion of the state-centered approach, it's assuming mother effers are going to do what's good for everybody, when history has shown us you're more likely to just enrich you and your cronies when it's all said and done. So second, the assumption that states make policy independent of domestic interest group pressure is misleading. Even highly autonomous states do not stand above all societal interests. Interest groups need not dictate policy, as the society-centered approach claims, but they do establish the parameters in which policy must be made. Even in Japan, which probably comes closest to the ideal autonomous state, the Liberal Democratic Party, the LDP position in government was based in part of the support of big business. It is merely a coincidence that Japanese industrial policy channeled resources to big business, or did the Japanese state adopt such policies because there was interest in one of the LDP's principal supporters? Thus, whereas the society-centered approach assumes too little room for autonomous state action, the state-centered approach assumes too much state autonomy. We may learn more by fitting the two approaches together. This would lead us to expect governments to intervene in the economy to promote specific economic outcomes, but often such policies are consistent with and shaped by the interest of the coalition of societal groups upon which the government's power rests. So, what is that saying? The other weakness is saying, society pressure The state-centered approach is supposed to be away from it, but here's the deal. When you look at some of these state-centered approaches, there's usually an interest group benefiting off of it. Does that make sense? So it's hard, and one side goes very extreme, the other kind of negates it, but the point is, in any sort of system, even if it is like a China, Japan autonomous structure, and there's nobody else there, and it's solely consoled power, fact of the matter is some interest group is going to benefit off of it when it's all said and done. So maybe how do you argue, and where does that lie in all of it? So finally, strategic trade theory itself, which provides the intellectual justification for government intervention in high-tech industries, has considerable weakness. Strategic trade theory is much a prescriptive theory, one used to derive policy proposals, as it is an explanatory theory. As such, it has some important limitations. The claim that government intervention can improve national welfare is not particularly robust. The conclusions one derives from any theory are sensitive to the assumptions one makes when building the theory. If the conclusion changes greatly when one alters some of the underlying assumptions, then the confidence one has in the accuracy of that theory must be greatly diminished. Strategic trade theory has been criticized for producing strong conclusions only under a relatively restrictive set of assumptions. Although the specific criticisms are too detailed to consider here, the bottom line is that altering the assumptions about how one country's established firms respond to a foreign government subsidy of its firms, about how many firms are in the sector, and where the firms sell their products can either weaken the claim considerably or introduce so much complexity into the model that the policy implications become opaque. So it's saying strategic trade theory, this whole idea of protect your high-tech industries, subsidize them until they could outperform, right? It's saying that, if you give the right premise, you will get a very easy conclusion, but the minute one thing changes with strategic trade theory, you got to think about it. They used examples of Boeing and chips. What about EVs and automobiles and food? And, food is not a high-tech industry, but think of again, let me give you another one, social media. So, we didn't subsidize Facebook, and if you really wanted to operate under that theory, you could think, so corn, I said food, but it doesn't apply to this. Why? Because agriculture it's not a high-tech industry. It's not something that has higher wages and that you need a certain level of scale. And again, there is limitations that you do get to agriculture. Food is high-tech. GMOs, wow. Thus, strategic trade theory does not provide unambiguous support for the claim that government intervention in high-tech industries can raise national income. In addition, even if we assume that strategic theory is correct, it's not easy for governments to identify sectors in which intervention will raise national income. It is difficult to identify sectors that offer such gains and then to calculate correctly the correct subsidy that'll shift this activity to domestic producers as a net gain of social welfare. If governments choose the wrong sector or provide too little or too much support, intervention can reduce rather than raise national welfare. Thus, the precise policy implications of strategic trade theory are unclear, in part because the theory itself is weak, and in part because it's not easy to translate the theory's simpler conclusions into effective policies. So, what's the point? Protect high-tech industries, subsidize them. You got a couple of examples, but easier said than done. It's borderline communism. But again, the theory is easier than actually turning it into a policy. And then on vice versa, you got to think about it. Too much, too little, you will destroy industry or end up backfiring and hurting other industries and lowering national and aggregate welfare. So in spite of these weaknesses, the state-centered approach provides a useful check on the tendency of society-centered approach to focus exclusively on the interest of societal interest groups. The state-centered approach points our attention to the interest of government officials and underscores the need to think about the ability of these officials to act independent from and even against the interest of domestic interest groups. By doing so, it suggests that trade policy may not always reflect the balance of power between interest groups, and tells us that we might need to take into account how state interest in this competition interests intervene in this competition in ways that produce outcomes that no interest groups desire. Yet, in spite of these useful insights, I believe that the absence of clearly specified micro foundations in this approach represent a fatal flaw. Without such foundations, the approach can tell us the autonomous state officials will act, but it cannot tell us how they will act. Adding such micro foundations, perhaps by combining the dynamics highlighted in the society-centered approach with the rich institutional environment emphasized by the state-centered approach, would enable us to begin thinking about the conditions under which state officials have the capacity for autonomous actions and about the ends to which autonomous officials will direct their energies. So, here's the deal. I don't know if you got what he said. I'll give you my take on it, and this is this is why we're going over so many things. A lot of these theories are it's just they lean heavy. This is why I tell you guys be careful of radicalism on all sides, because usually they're fatally flawed. Usually they're ineffective at explaining it, and nowadays, look at the society we live in. You could find a counter argument to everything, and things operate a lot different. And what he's pretty much saying, you got to kind of combine everything. You can't go exclusively society, exclusively state-centered, and you kind of have to have a mix to be able to determine how it will always play out. And I mean, when it's all said and done, there will always be caveats, and it may not always play out how you think, even if all criteria are met. That's the weirdness of economics and politics, especially as time goes on and changes. So, ta-da! The state-centered approach. So now, ladies and gentlemen, we begin Chapter 6. Trade and Development, number 1. We're going to talk about this a lot. Import substitution and industrialization. So, Mexico has experienced an economic revolution during the last 20 years. Until the mid-1980s, Mexico was one of the most heavily protected and highly directed non-socialist economies in the world. Importing anything into the country required formal government approval. Even with such approval, tariffs were high, averaging over 25% and rising as high as 100% for many goods. Moreover, Mexico did not belong to the General Agreement on Tariffs and Trade, the GATT, and it was hard to imagine any conditions under which Mexico would seek a free trade agreement with the United States. Behind these high tariff walls, the Mexican government intervened deeply in the domestic economy. Government-owned financial institutions channeled investment capital to favored private industries and projects. The government created state-owned enterprises in many state sectors, about 1,200 of them by 1982, that together attracted more than 1/3 of all industrial investment. Today, by contrast, Mexico is one of the most open developing countries in the world. They entered the GATT in 1987 and the North American Free Trade Agreement, NAFTA, in the early 1990s. The Mexican government has retreated sharply from involvement in the domestic economy. It has sold state-owned enterprises, liberalized a wide variety of market-restricting regulations, and begun to integrate Mexico deeply into the global economy. In less than 10 years, the Mexican government opened Mexico to foreign competition and drastically scaled back its role in managing Mexican economic activity. Mexico's experience is hardly unique. Governments in India, China, and much of Latin America and most of sub-Saharan Africa opted out of global trade systems following World War II. Most governments erected very high trade barriers, and to the extent to which they participated at all in the GATT, they sought to alter the rules governing international trade. Convinced that the GATT was biased against their interests, developing countries worked through the United Nations to create international trade rules that they believe would be more favorable towards industrialization in the developing world. Like Mexico, most governments intervene extensively in their economies in an attempt to promote rapid industrialization. Drawing on the logic of the infant industry case for protection, governments use the power of the state to pull resources out of agriculture and push them into manufacturing. And like Mexico, these policy orientations have changed fundamentally since the late 1980s. Most developing countries have dismantled the protectionist systems they maintained in the first 30 years of the post-war period, have become more active participants in the WTO, and have abandoned the quest to institute far-reaching changes to international trade rules. Most have greatly reduced the degree of government intervention in the domestic economy. So, we're getting some of the history, but we're going back. We got to go back to think about it. They, post-World War II, a lot, again, India, China, a lot of Latin America, Africa, they didn't want to F with anybody. They said, no, government control. Honestly, I could even argue in a lot of places this is kind of the breeding grounds of like early government autocracies and corruption in some of these places. We're going to get to that in later lessons as we talk about why resources in wealthy nations don't get them distributed as well. You could even apply state-centered, society-centered approach to kind of understand why. Again, national welfare doesn't always increase, but one big thing, the bias. Remember, we were talking about the WTO and the trade system. Early on, these guys were like, dude, all you rich countries are just trying to scam us. They thought it was rigged against them. You know what I'm saying? So that's where it wasn't really until the 1990s where these countries were like, F it. We're not going to try to change the rules. Like, let's get with it and liberalize. And then they started to move in this direction. So this chapter and the next examine how political and economic forces have shaped the adoption and evolution of these new trade and development policies. The chapter examines why governments in so many developing countries intervened deeply in their domestic economies, insulated themselves from international trade, and sought changes in international trade rules. The next chapter focuses on why so many governments have dismantled these policies during the last 30 years. We look first at how economic and political change through developing world brought to power governments supported by import competing interests. We then examine economic theory that guided policy during those times. As we shall see, this theory provided governments with a compelling justification for transforming the protectionism sought by the import competing producers that supported them into policies that emphasize industrialization through state leadership. Having built this base, we turn our attention to the specific policies that governments pursued during this period, looked first at their domestic strategy for industrialization, and then examining their efforts to reform their international trade system. And that's it. That is our intro, ladies and gentlemen. So, this one's going to be a lot of history. We're going to have 2 chapters of history, talk about the starting, going to go into what they did, and then before you know it, bro, you're going to be talking a lot of trade policy, baby. So, any questions? Any questions, Chatadonia? Any questions? Speak now or forever hold your peace. Captivating. I love it, man. I really do love this stuff, and I'm glad you guys are loving it too, man, because by the end of this, you're going to know a way more than a lot of people. And I think some of you, you have a hunger for it, and I hope it rewards you well. Seek and thee shall find, my brother. Seek and thee shall find. Hey, evening. What up, Aliska? We're about to wrap it up. You might have to go back. That's it, man. Got here late. It's fine, baby. It's fine. You got any final questions? Anything? We're going to be... should we make a trade? Ba-da-bop-bop-bop. So gold's up a little bit. MO... He's chilling. I don't know. I wish I grabbed more silver, or I wish I grabbed a silver and more gold today. But yeah, I don't even think ES down by a quarter. NQ up by 0.6. Russell up by 0.03. Actually, I kind of like the Russell at 24, but the Russell's been mad. That's rot. 2033. Yeah, bro, this thing's it's terrifying, though. Look at this thing hasn't moved, bro. It's crazy to think. When I took a vacate, remember, we killed it on the Russell at the end of last year. It's crazy to think it's still top there for this many months, bro. It's been like 6-7 months more. It's nuts to really think about. The Switzerland, we talked about that in the beginning here. I think it has the potential to lift gold, and it's just, I think they have a problem with their bonds. Again, Switzerland's very financial. They have a lot of other assets, but at the end of, like, why are they going back-to-back? Nobody's doing back-to-back like them. So that's what it is. Do people disagree with this explanation of events, or which one? Are you talking about in this book? In this book, I would argue most people, this is an accepted version. That's what that's the thing. It's updated, but this book is taught everywhere from conservative to like liberal universities. That's the thing. There is certain history that's like kind of not disputed. That's why I like this book, because he just goes over all of it. It doesn't really have a political leaning, but it also it's not like offensive to the point. It doesn't really make too crazy claims. If it does, it always has a counter. We talked the green policy last time. It criticizes fairly. That's why I really appreciated it, because I remember learning. I had this book in college, and I really enjoyed it. And it was curriculum based. That's what I learned a lot from. But then it updated, and I had the old book, and then I got to read the new one. It's called International Political Economy by Thomas Oatley. But the new book it has the trade war. It talks about Biden. It talks about Trump. It's not a game of like bashing as much as it is educational. That's the thing. Like I do think we have seen a degradation in academia, but if you do find the OGs in academia, it's always legit. Like I don't know how to describe it. I don't want to say always, but there is still some people who are not drawn into, trying to promote a message all the damn time, and really just understanding how things went on. And like, that's the whole point. Every single, like, if there is ever a claim, there's usually a source, it's just like, it's analytical. And I mean, it's hard sometimes to say things if you're worried about, being reprised. But yeah, Oatley, just like that. Thomas Oatley. You could buy the book. There's a digital version of it. Definitely go support the author. I'm going to try to get him on. I want to see if I could get him for an interview. I love the dude, but I've read a lot of his other stuff. He's very well regarded. And like I've said, like you could find this book at pretty much almost any university. And then it is taught at some of the more Ivy Leagues as well. The dynamic yield curve. I think we will eventually normalize, but we're not quite there. Unfortunately, it could happen in 2 weeks. It could happen in 2 years. Sadly, the last thing I showed you guys, and I'm kind of, it could take 2 years. Unfortunately, let me get you the chart. And because this is why I'm tripping. Let me see, where is it? Right here. So this is even maybe like a couple weeks behind. But the 3-month 10-year, it is now more inverted than ever before in history. 2-year 10-year has never been inverted this long. The 5-year 10-year, that's the one that's falling behind. The 3-month 30-year, that's there, and then 2s and 30s. But once you get to the 5-10s, that goes for another 20, like 2 years pretty much, the whole entire yield curve will be something we've never seen. So it could take that long, unfortunately. I know that would be wild, but eventually it will uninvert, and I do think almost I do have a lot of doubts, because I brought this up in the video. I do think the uninversion will cause something. However, the problem is that I think Powell is crazy enough to do it. There is a way that the curve can uninvert without cutting rates. And that is, it's not impossible, but it's a tall order. However, I think that that would change a lot. That would be the only thing that I think would be difficult to observe or even play off of. Because like I'm saying, I kind of have a plan for any other direction, but that would be more in the realm of unknown. Because then it would literally, you would get a normalization of the yield curve, but it would not coincide with the Fed trying to spur economic activity. And that is a crazy concept, but that would void my whole theory, low key. Because then I believe the whole idea, once the Fed cuts, it's based off of spurring demand. I believe it's don't underestimate the Fed. They're not dumb. And again, like I think they know it. They see everything. They have I hate to be that guy, but like back in the day, bro, like pre-2020, I don't think you guys understand how powerful like macroeconomic data was when it was accurate. It's just, unfortunately, it's dog shit now. So like you got to think the Fed has the real juice. They have the real data. They have the data that's not as politically motivated. You don't have to deal with the pandemic, the seasonal adjustments that have changed. So it's just like, I'm very confident. Just like people tell me, Josh, the market's rigged. I'm like, yeah, no shit, Sherlock. But it's like, that's why I have a long term, like for real. But it's the same thing. Like I don't. They may be dumb sometimes. They may make a mistake and hold for too long. They're not that dumb. I firmly believe that they know everything. I know it sounds crazy, Powell. I sound like a nut job, but I don't mean it like they're Jesus. You know what I'm saying? I don't believe there's like a psychic element. You know what I'm saying? Like there is a realm of reasonability that I hold with this theory, but I do believe that if, let me just put it simply, they have an edge. That's it. That's the only thing they have an edge. This, when it's all said and done, they have an edge on the data, the information, the messaging of it, how, again, Powell has even accomplished making sure inflation doesn't go up. You know what I'm saying? Like inflation expectations. Yes, they know how the sausage is made. I agree. So they have an edge. And I think that edge will tell you what's really happening. But my theory is based off them cutting rates to spur aggregate demand. We will cover aggregate demand eventually. I'm going to get that. We're going to get there in the book eventually. But until that happens, we'll see. But then if Powell keeps the rates here and then finds a way to, I don't know, change policy. I don't know how it would happen. That's why I'm saying it's kind of mind-boggling. But if the curve normalized, a.k.a. the 10-year, went up higher than the 2-year, you would uninvert without a rate cut. And it's only half a basis point away. So it's close, but it's just what it would take to do that. That's the weird part, because usually by the time, the rates are going high in the short term, people are going to think it's going to get better later, and vice versa. When rates are low in the short term, the long-term rates run up because people are like, yeah, you're going to raise eventually. So it kind of has a inverse effect, which makes it difficult to do, but, we'll see what happens. We will see what happens. Good questions, though, Chad. What else we got? Oh, man, we already been here for an hour 15? Oh, we kicking it. We kicking it, baby. What's up? What's up? TLT, no. Honestly, dude, it's crazy. I put it in the video. I mean, granted, I've hit most of the major TLTs in my lifetime. Like, dude, TLT doesn't happen as often as you think. You're probably on the other channel, bro. We're on a different channel right now. But you got to realize, bro, I was a child. So the first yield curve uninversion, again, '01, I was a baby. I was not trading. I got into trading around '07. Literally worst time ever. So I didn't get this. This was the inversion and uninversion. You know what I'm saying? But any other inversion and uninversion, I have caught in my lifetime. And again, we've generated a lot of money with it, which is, I think I have some credibility. But the point is, in the last 20 years, 24 years, it's only happened 3 times. You know what I'm saying? It's not it doesn't happen as often as you think. That's the craziness. So every time you see people going ham on TLT, just imagine if you're really betting on the big one, it's only happened twice, 3 times in the last 2 decades. So I've caught in the major ones. This would be our third big one if we could grab it, but I don't know how it's gonna play out. That's the thing, man. You gotta be prepared and you gotta be humble too. I definitely think there's been a lot of humbling nature that these markets provide, but it's going to surprise us in many ways. But I do think that if you're aware, you will be rewarded. You follow the principles, not even just the yield curve, but money. Don't ever forget, bro, money is very biological. You can attract it. If you don't protect it, it'll run away from you. And I just really think certain principles will keep you alive, and you got to stay alive. That's it, man. That's it, man. That's it. What does it mean in basketball terms? The Lakers only win the championship once every 10 to 15 years, and I predicted it every time they've done it in the modern time, but just because it looks like they haven't won in 8 years doesn't mean they're going to win next year. Is that good? That's kind of what I said in basketball terms. Mm-hmm. So, Chattadonia, on that note, a good 1 hour and 20 minutes, baby. I hope you enjoyed it. I hope I see you in the morning. Go to youtube.com/thestockmarket. I will see you there, baby. I will see you there. But Chattadonia, thank you for your evening. I hope you learned something, baby. I hope you're ready for Friday. But that is all I have for you. Finger to the sky, baby. You know the vibes, but that is it. Have a wonderful evening. I'll see you in the AM and horn. Woo!